Hello, guys. Today is another day. We are out from weekend. So yeah, on Monday I couldn't record because of some personal reasons. So yeah, it's already one. Where's the camera? 1:47 evening, and I finished a can of energy drink. So yeah, I'm ready. I'm ready, full ready. So yeah, let's. Today I took a couple of trades and they worked out as planned. Not, yeah, most of them worked out as planned. So yeah, let's get into the charts and analyze what I've done right and what I've done wrong. And at the end of the video, we will sum up the video and I share my lessons, today's lessons with you all. All right. Without further ado, let's get back on the charts, right? Uh, we we begin from Euro USD, then we'll move on. So yeah, this is the trade like 1 to 5 risk to reward. This is pretty much pretty good trade though. Well, how I took this trade, I yeah, as always, my confluences. I I found my daily bias on a daily time frame, like to align with my mind. So where we're going and what we are going to do next year. So yeah, overall we are seeing a clear bearish trend because we have a lower high, lower low, lower high, lower low, lower high, lower low, lower high, and we're gonna create lower low below this level. So yeah, we are clearly on a bearish trend. And if we look at our 4 hour time frame, uh, meaning that if we have a bear, bearish bearish structure on a 4 hour time frame, that clearly means we gotta look for positions for sale for sure because we cannot trade against the trend against big ass hedge funds. If we do, we have a high probability that we end up losing that trade that on that trade. So yeah, we don't wanna play play with those big guys that run the market. So yeah, we are going to playing it safe. So yeah, all right. But here, what I did, like it doesn't, it's not wrong. I entered for buys on a bearish market because I have enough confluences and I have full confidence that I could make it work out, make it work out, and I did it clearly. I marked out my 4 hour swing range clearly, and I saw a clear bearish trend. There is a breakout structure. What uh what what the market what price said after breakout structure? It went up clearly. And what price did before that? It actually swept available liquidity that is placed around here, all around. And it went down and swept available liquidity and went up. How do we know this is a clear liquidity sweep? We have a clear V-shaped reduction, as always. And what price does after a clear V-shaped reaction? it it goes down to validate, to mitigate the demand zone or our mm, liquidity candle. And then what price does, price goes up beautifully. So this is our this was my trading plan. I traded on a pullback, pullback, clear pullback. It was a really good trade, but aggressive one for sure. And I and let's go down to 1 hour time frame to see the price traces in detail. And I marked out all my key levels, which means uh, supply zone, demand zone, order block, breaker block, yeah, for strong confluences that I need. So yeah, we identified our supply zone, and I was thinking it would be better when it if it comes down and I trade for continuation. Yeah, I was thinking about that. If price comes down and creates a breakup structure, therefore I mark it out the breakup structure line. If it if if it would have done like created a breakup structure, I could clearly enter for sells for con continuation strategy, whatever you call. And then it didn't like it like signed me like hinted it's not a breakup structure, boy. It's not a breakup structure. It's actually a liquidity candle. So yeah, I accepted that. In the market, you gotta be adjustable. Adjustable. You don't know what market does. At the end of the day, it's uncertain for sure. Even you have like 100 confluences lined up on your chart, and even you have full confidence, you might lose. There is there is always potential that you will lose trade. At the end of the day, there is no 100% there is no 100% certainty probability that you are going to win. So with that being said, yeah, we gotta be adjustable as possible every single time. We gotta be careful. We gotta be aware of what 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 the price is doing to us and what how is price moving. Is there any sort of news like this? You see this news. We gotta be aware of this sort of levels because when there is a news, there should be and there always be high volatility, very high volatility. Therefore, yeah, gotta be aware of every single move of the market. On a 1 hour time frame, we got our got our demand zone mitigated and it went down again to grab enough liquidity, and then it goes up like eventually. Eventually, you gotta trust the process, bro. You analyze it, you did your research, so you know you gotta trust on the process. At the end of the day, there is even though there is no uncertainty, no pain, no gain. You gotta risk some money to make more money. This is the this is game plan every single time. All right, to make it more clear, we gotta go down to 1 hour time frame. No, 15-minute time frame. Sorry for that. 15-minute time frame. So yeah, we easily enter it here, so I cannot tighten my stop loss, obviously. But there was a really good potential that I could enter right around here. I actually mark it out my keys on. If price goes down, I can easily enter here for buys, uh, like aiming for this TP. Oh, that I thought I thought it was risky because because of this structure. I thought, yeah, price consolidated a bit, therefore there is no like I was in a position I thought like skeptic about my trade, and it I thought it was going to hit my stop loss, and it didn't. It made my day for sure and hit my TP. This is the this is how I traded, how I took the trade. It's simple as that. But you know, it might seem it might seem simple for you all. I know. You must say it's a simple strategy. I can actually copy and paste and get the same result as you got. It's not gonna work that way, bro. It's not gonna work that way. You gotta put in the hours, put in the effort, put in the psychological work on your trading skill set. Then you will get this sort of results because at the end of the day, your strategy accounts for only 20% of your trading ability. Another 80, the rest uh, makes up your psychology and your emotional level. What do you call? Yeah, whatever that is. Emotional state, yeah, emotional state. So you gotta control over your emotions, your decisions. You shouldn't make reckless decisions when you're trading, getting FOMO, like literally everything. Therefore, very less uh, percentage of your trading skill comes down to your strategy. Therefore, you gotta learn your strategy and you gotta believe in it. And before that, you gotta like look through 2 to 3 strategies and find your own. How you gonna find your own strategy is simple. You gotta know, it should make sense to you, not others. All right. If ICT makes sense to you or other strategies, you gotta stick to it. You gotta put in the hours, you gotta put in the effort, and then you'll succeed in it. Within the right amount of input, you will get the right amount of output. This will happen at the end of the day without putting right amount of effort and you're waiting for the right amount of output. It's not gonna work that way, dude. You gotta put in hours to get the same result as I I got on my trades and as professionals get. Therefore, yeah, gotta work on your trading skill, your psychology, everything else. It's not just about trading strategy. It's about how you react. Yeah, there is no lessons. The only lesson I got, I'll talk about later on that video. So yeah, keep on watching. Let's move on to GBP JPY. Interesting trade. That was a bit reckless and risky for sure. Yeah. If we are on a 4 hour time frame, we can clearly see we're on a bullish trend. So yeah, I had marked out all my key demand zones because we're on a bullish trend. So price should come to our demand zone before reacting and going upwards. All right, this is how the price works, bro. So yeah, uh, I did actually mark it out a really huge swing range. You see that? You see that? By mistake, I mark it out daily swing range instead of 4 hour, and I just align with it and I mark it out my 4 hour swing range. After that, to make it more clear, I was waiting like whole months to get to take a trade, and I did mark out my 4 hour swing range. And what happened? Yeah, you can easily see. I didn't like really mark out 4 hour key levels like always. Supply zone, order block, demand, breaker block. No, none of that shit. None of that shit. The reason why there is oh shit, man. Come on, dude. Yeah, the reason why there is a tight range, very quite tight range is going on the chart. So yeah, it's literally impossible to mark out our 4 hour key levels. Even if we do, there is a very less amount of key levels. Right here, yeah, it's already respected. So there's no gain here. And 1 hour, it's 1 hour. It's not even 4 hour, bro. Look at that. 1 hour, 4 hour. Demand zone, yeah, this is demand zone on a 4 hour time frame. So it actually mitigated and react to it. And price, so the price went up. And if we come down to 15-minute time frame, yeah, we can actually see the charts in more detail. Yeah, what price did, like price like was going great. Yeah, we were clearly on a bullish for sure because we were on a pullback. We were on a pullback, yeah. We pulled back to our recent demand zone and we react to it and created higher highs and higher lows. So yeah, this is clearly a pullback. It's not a bearish trend. It's pullback. It's a pullback, and it's a real move right after a pullback. So yeah, how I took this trade is I played it simple. It's not that complicated. Trading is not complicated. Everybody say that. But the real complexity comes down to your psychology, how you react to the price. It's not about predicting the next move. It's about managing your capital. Yeah, we liquidated all these lows here, lower highs with this candle. And what price did? Yeah, and price said us like, yo, bro, this is a liquidity candle. You gotta take advantage of it. And I was like, all right, bro, we gotta do it. Then I took advantage of it, like always. Yeah, what price did, price created like sort of like a, that's sort of like it's clearly a liquidity sweep, and the price came down and react off of this liquidity candle, liquidity zone, liquidity, I don't know, candle zone, whatever you say. And it created sort of like a weak demand zone here. I don't know if it's a weak demand zone, but we'll see. Time shows. And what I did, like, I come down to our 5 minute time frame, and I was like, oh, what the heck? Where I'm gonna enter, where I'm gonna execute, or like, or maybe I can't. So I was like, all right, let's let's make a deal. I was like, yeah, in order to execute this trade, I don't know if it's a real bullish, like I gotta make sure this is for sure 100% bullish and there won't be any like pullbacks again. Yeah, I made sure this is a fractal market shift, internal market shift plus breakout structure, meaning that there was gonna be a little pullback right after. Yeah, it showed us a pullback, and what price it price went up straight, showing us a clear bearish, a bullish trend. And then what we did, I marked out really like demand range, not pivot zone. It's not a tight range, so big demand zone, big ass demand zone. On 1 hour time frame, yeah, maybe five. It was at 5 hour time. Was it on 5 hour time? 5 minute time for one. Uh, damn. It was on 5 minute time frame. Sorry for that. This was the candle that created this huge upward movement. Yeah, it wasn't this movement, but this was the moment that this small candle created. Yeah, this was actually a demand zone, clearly. And what I did, yeah, I waited for the candle to come down. Yeah, I entered right after because price was respecting demand zones one by one. This was respected, and I thought this should be respected also because this demands are respected, this demands are respected. Yeah, 100%. This third one will respect the demand zone, and I was entered, and I entered and I took the trade, and I let the trade play out. I didn't took it seriously and risky, so yeah, I didn't even like put my stop loss or right on the edge of this supply zone. I put it right right around here, like realistic. It's actually want to serious reward, pretty decent job. 3xing my risk money. And then what price did, like price went up, liquidating, grabbing all the liquidity available here, here, and creating a clear V-shaped reaction. Came down straight to where? To whatever. There is a sort of demand zone. Maybe there is a clear demand zone, but it's weak. I don't know, maybe if it's gonna work out or not. But I think the price at the end of the day is coming to grab the liquidity available here and then reacting from this extreme demand zone, sort of extreme demand zone, and go up, swiping the available liquidity right around here, swiping these liquidities. So yeah, I took the trade pretty decent R multiple. So yeah, I I won GBP, JPY, and also GBP USD. That was a really good trade. I I I traded. I scalp trade. I swing traded actually. Yeah, for sure because it took me like a two 2 days. I executed yesterday or is day before yesterday. Yeah, that was insane. I waited too long. And yeah, well, what was the result? What is the result of waiting too long? 1 to almost 10 reward, 1 to 9 reward. That's insane. Like literally insane. I I actually 9x'd my money. that I had risked on this stop loss. This stop loss was also too tight, for sure. 16 pip stop loss. What? It's not 16. Like, yeah, 16 pip stop loss and 152 pip win, winning moment. That's crazy. And how I took this trade was simple as that, simple as always. I don't make it too difficult for you all. I make it as simple as possible. And what Price did, Price was clearly a bullish structure and created our market 1 hour, 4 hour time frame. So yeah, what Price said, yeah, I'm clearly bearish. You cannot do anything else. And I was like, really? Are you really bearish? And then what Price said, yeah, Price like really going to trick me, you know. I know they are game, bro. I'm on this shit almost almost a year. I know how they are playing, bro. Broski, yeah. Like always, like the last trade, this was the same. This is the same trade. Instead of like marking out as market share, we gotta mark it out like plus liquidity sweep. This would be a fair this line range, whatever you call. Because there were enough like really good amount of liquidities right around here, and it wasn't they weren't only the liquidity available here, there were also liquidities. So yeah, what Price wanted to do, Price wanted to come down really badly. And what Price did, like Price clearly created on our 1 hour time frame v-shape v-shape, like clearly a v-shape reaction, and leaving us with a clear, like literally, like beautiful as uh, liquidity zone, liquidity candle zone. Like I said, like what Price does, like Price right after sweeping available liquidity and creating a market shift, like Price has to create a clear market shift right after sweeping available liquidities or whatever. So if it to make it a really valid liquidity, so we have to see a V-shaped reaction plus market shift and plus uh, price has to come price has to come down to our liquidity zone to for buyers to step into the market and continue increasing the price. That how the game works, bro. It's simple. Everybody tries to make it complicated. Sky, yeah, everybody wants to make it complicated, adding a bunch of indicators, like whatever bullshit. You gotta feel the market. You don't need indicators, robots, any other thing. You gotta get the skill. You gotta get the feeling of the market. Then you will start to trade profitably, analyze the market profitably, believing in your edge, in your own edge, without any sniper entry, whatever signal channels. Yeah, they're bullshit. So yeah, I drew it before the this move happens. What I drew, yeah, right after like price, like comes down and gets reacted off of these levels. And what price does? Price goes up. Easy as that. Isn't that freaking easy, bro? Like 1 to 9 risk reward within 2 days. 2 days of work. You risked $100 and are getting 1K within 2 days. Isn't that insane, bro? This is how advantage you get when once you learn trading. That's insane, like literally. I love trading. I love trading from the bottom of my heart. I literally obsessed with that. If I wasn't obsessed with trading, I wouldn't be here recording this video at 2 freaking a.m., not p.m. a.m. This is the level of obsession I have. And yeah, simple as that. I got the trade, winning trade, easy, easy as that, simple as that. But yeah, pretty feels pretty damn good. How I took the trade on gold right here. I wasn't going to take it, but yeah, I risk it all. I risk it. Like, fuck it, I'm gonna take it. So yeah, I took the trade. I marked out my 4 hour swing range right after what I recall. No, there wasn't a liquidity, so yeah. Yeah, that was actual liquidity sweep. We can clearly mark out our liquidity sweep areas so we know every time we look at, yeah, there is a liquidity sweep, so yeah, price. This push the price to go up. Yeah, it did indeed. And what price said, yeah, price said whatever, yeah. I know how you did this V-shaped reaction, and the price went up and went down, creating a clear V-shaped reaction, and creating a fractal market shift, which is internal market shift. So yeah, simple as that on our 1 hour time frame. What do we have here? We also have another liquidity sweep right after mitigating this demand zone, and we mark it out our supply zone, so we know our limit of uh, keeping the trade. So yeah, and what price did? Price went up after mitigating this level and came down, liquidating all the lower highs, lower lows here, and what price did, like, clearly, yeah, this was our liquidity candle. Like, isn't it clear? Like, isn't it freaking awesome? Yeah, you got your liquidity candle after grabbing available liquidities here, and what price did? Price went up. So yeah, price price didn't have any fuel. So what price did? Price grabbed enough fuel and went up, creating our breakout structure and market shift, internal market shift, fractal market shift, we can say alternatively. And what price did after breakout structure all the time? It pulls back 100 and 1000% to our recent demand zone. So what price did right after it went up? Simple as that. And I wasn't able to took the trade because I wasn't aware. I was away. I was away from the market. I was working. So yeah. And then what price it? Price went straight up. And I missed the really clear and very good opportunity right here in my face. I thought it was going to consolidate a bit before coming down. Didn't, obviously. So yeah, whatever. And we got a trade though. We got a trade. we got the trade. How I took the trade? I didn't took it on our 15-minute time frame. I took it on I don't know, either 5 minute or 1 minute time frame. Yeah, I took it on 5 minute time frame. Yes, yeah, 5 minute. I marked out my demand zone and what price came down. Respect to my demand zone went up, creating available liquidity, and what price set around after mitigating our take profit, leaving me leaving me with 1 to 4 risk to reward. Price went down to grab a liquidity fuel, what we call, and went straight up and created another beautiful liquidity sweep or breakup structure, and it came down straight, pulling the price back. What price could have? By the way, I lost this trade for sure. It hit my stop loss easily. I'm out. No, I'm not out. I know this trade is going to play out 100%. Just a matter of time because I believe that there is not any other like key levels on because all of them are mitigated. If you were marking out this demand zone, yeah, clearly we got mitigated. All right, another one. We got mitigated. Another one. Yeah, we got mitigated. Another one. We got mitigated. So yeah, there wasn't any like sort of key level support and not support but demand. So yeah, I was playing it safe, not aggressive as hell. And both of them are almost 1 to 7 risk reward. So gotta wait for the price play out. It's actually a Asian session. It's a bit risky. I don't know how price moves. We'll see in the morning how I die on this trade. I think it's gonna hit my TP. There high potential because it grabbed enough liquidity. So yeah, it mitigated the extreme, the available like the last available demand zone. There were any available demand zones after that for sure. If we are going down on 1 minute time frame, it's going to be a problem because yeah, we can actually find out available demand zones, but not sorry, not like very high potential probability demand zone. So therefore, we are sticking with this 5 minute trade trading structure. So yeah, I've did pretty much good on this trade. I'll let you know what happened on this trade. Well, what happens on this trade on the next video for sure. Yeah, I actually lost a couple of trades on gold right here before entering this trade. The reason why I was in FOMO, I wasn't waiting for the right liquidity, not the right zones because it's not pretty much high high potential demand zone for sure because price easily went up and price never comes down to our near demand zone 8 out of 10 times. 8 out of 10 times it comes down to our extreme demand zone to get fuel and it goes either up or down depending on the trend. All right, that's like how what you want to call it. That's how play. That's how game works. Trading game works. Therefore, yeah, keep it simple. I actually wrote it down on my trading journal. This is my trading journal. So yeah, what I wrote down. Lessons. Today's lessons. Always put your TP to the nearest demand or supply zone with at least 1 to 3 risk to reward. Yeah, for sure. Nearest with at least 1 to 3 risk to reward, meaning that you took a trade, you look for any other supply or demand zone depending on your direction you're trading with, and you put your TP on that level below this supply and demand zone or order block, bracket block, whatever. The a point of interest where the price reverses has the potential to reverse. This is where you put your TP. And lesson number two on gold: never believe in near key levels, demand zones like supply zones, because I lost three trades in a row believing this near demand zone is going to work out. It didn't, obviously. It happened a couple of times before and it happened again. So yeah, it's not gonna happen. It won't happen again for sure because I learned. Lesson number three, you are fucking retarded after a couple of winning trades. I thought after a couple of winning trades, I was the GOAT. I know how price moves. I can predict anytime I want. I'm the one who I was thinking about myself as if I'm a hedge fund trader who moves the market with billions, trillions of dollars. And yeah, I was like literally thinking about like dreaming as if I'm that guy. Obviously, I'm not. I'm still weak. I have really small knowledge in trading world. Therefore, I gotta learn more lessons. I gotta learn what I've done wrong, what I could do better. Yeah, for sure. Always leveling up, and never think of yourself as a really good profitable trader. Even you want like straight a month, 2 months, like after winning 1 to 2 years, you can actually think, yeah, I've been winning. I've been winning a lot of trades for a couple of years, and I'm a profitable trader. I have a crazy win rate, so I can trade anytime. Even at that time, you cannot predict how the market moves. The reason why market is uncertain. Even you have 100 or 1,000 confluence lined up that you're going to buy in this price range or you're going to sell in this price range. Market is uncertain at the end of the day. You gotta adjust accordingly how the market is moving now at present, not in the future, not in the past, at present, right at this moment. All right. Lesson number two: always look for extreme zones. Yeah, never forget. Extreme zones are the best and high probability zones ever. Like never distract yourself with near near key levels that has a little potential to reverse or continue the overall trend structure. It's not gonna work that way. Price always comes down, or even it reacts for a short period of time. It cannot like grab available selling or buying pressure from on a really weak and near demand zone. It's not gonna work that way, dude. Price has to come down to extreme zone, grabbing enough selling pressure or buying pressure to go either up or down. All right, that's a lesson you gotta learn, you gotta experience, like I did, and always look for like again. I'm gonna read this lesson again. Always look for extreme zones. Stop hopping for near key levels, especially on gold. Yeah, gold is for sure. You shouldn't you shouldn't trust on near demand or supply zones. You gotta wait for the price to come down to your extreme zone, and then you wait for liquidity sweep, V-shaped reaction, market shift, and then after you will take trade either on your on supply or demand zone, depending on the market structure. So yeah. And then the last lesson, today maybe I a little bit over traded after hitting a couple of losses for sure. Yeah, never over trade. Know your limit. Yeah, know where to stop, where to continue because like a fool guy, I'm literally have zero experience. I have a little bit, but not that much because like a fool, I'm trading on Asian session. What the heck? I'm trading Asian session. I'm trading gold on Asian session, which is crazy. Nobody does that, bro. What the heck am I doing here? I should be out of these trades. Maybe yeah. The reason why I'm like executed on Asian session, I actually executed right around New York closed. There were decent like medium volatility, not that much. So yeah, and that what price is doing consolidating, and I'm gonna tell why I took trade double trades in a row on this range. First, I never took a trade on gold on Asian session in the first place, and second, I want to experience it how it's going to work out. It is going to work out either as planned or not as planned. So we'll see what's going to happen in the morning or in the afternoon on London session opened. So yeah, this is the whole reason I took double trades because I had all my confluence lined up. I had my A plus set up. If it doesn't work out in this level, and the reason would be the reason will be I should wait for the price to grab even more liquidity because at the end of the day, when you lose trade, you get liquidated, which means you haven't really find out or really notice it or find where the liquidity is placed. So if you don't know where liquidity is, you're probably the liquidity. That's how this game works. You either be the liquidity or you will grab the liquidity, like hedge funds, like banks, right? That's the that's the that's the video. That's the end of the video. Thank you for your attention. And that's the trades I have taken today. I I had pretty decent losses and decent wins as you've seen. Therefore, yeah, that's it, guys. Thank you for your all